Welcome into Velocity Assets today. This is going to be interesting, guys, because if you are following me out there on some of our other channels, whether it's Paul Barron Network or the Paul Barron Podcast, you get a chance to see my picks on everything crypto and most investment quality assets. Well, this show is going to be a little bit different because we're going to diversify a little bit into some other things. We're going to be talking about businesses. We'll also be getting into, of course, crypto. But most importantly, I think we're going to get into some fun stuff, and that is in reference to cars. Yeah, cars, my favorite vehicles, and why you are going to be able to actually drive cars for free. And that's right, high performance assets for free. We'll break it all down. You guys stay tuned for that. Let's kind of just go over on to a few points I want to hit on because when you look at certain automobiles versus crypto, and we're going to be talking about XRP today, Bitcoin, and Ethereum. Those are the three assets that I think have some opportunity here. Many of you that are coming in from the car community will learn a little bit about, crypto, and many of you who are in the crypto community will learn a little bit about autos because there's an opportunity here for diversification. And you think about the cars that you can diversify into. The one thing that I will harp on a lot on this channel is that the problem with getting a vehicle, no matter, because everybody has to have a car for the most part, some of you in a city that maybe don't have that problem, but most everybody else has to get one. And most of the time, if you're following this channel, you're probably a little bit better off because you're looking for wealth building tactics. That is what we talk about. The biggest problem that I have made in 25 plus years of owning what I think are some of the best automobiles in the world has been getting into cars that depreciate much faster than the market accelerates on them. And it doesn't mean that a car is an investment. What it means, there are cars out there that have the opportunity to actually have less depreciation and in some cases, zero. That's why you're driving it. Today, I'm going to be talking about my specific automobile or one of that I own. And there's a handful that I think match up to this. The Porsche 911 is one of my favorite picks. It's one that I've had multiples of, and it's a car that I think for the most part, people have maybe never truly understood what its benefit is. And I'll just give you guys, we'll kind of talk about it a little bit here as we screen share. But one thing that I think a lot of people miss on the Porsche is one of the biggest issues, and that is that for some reason, Porsche has been able to do something that BMW has not been able to do, that Mercedes has not been able to do, that Audi has not been able to do. Pretty much any major European brand has not been able to hold and retain its value. And that is the problem that you face right now, especially around buying a car. And German sports cars are, I think as comparable to crypto assets as any kind of vehicle or asset out there. If you think about the diversification opportunity, this particular car that I have is the 911 ERE. It's called the Endurance Race. Now, this is one of 73 in the United States. Now, granted, I'm not saying you should go out and buy a collectible. Those do appreciate in value. Those are true investment grade cars. But in the Porsche 911 class, a lot of those will completely eliminate the drawdowns that you face in automobiles. And it's very similar to crypto. There are certain crypto products and projects out there that will have drawdowns. And it's ironic that my Porsche 911 has actually outperformed Bitcoin this year. So to give an example of being able to rotate and diversify in assets, that's why I look at this as one of the kind of the fun categories of the industry. And also just for anybody that's wealth building, a lot of times you will say, hey, Paul, I want a Lambo. Lamborghini is fantastic. There's a handful of Lamborghinis that do fit that. The Ferraris, you could get in the Scuderia. There's a handful that really do represent great quality and do appreciate in value. Here's the problem, guys. You can't drive them every day. Not that I would drive this one every day, but you can't drive them every day. If you had a 911, normal Carrera or even a Carrera S, those are drivable cars. And the ability for those to maintain or have very little depreciation is real. It is so much better than BMW when it comes to depreciation that it is one of the top picks I have in terms of retaining value. That's it, retaining value. So Think about that, because when you are building wealth, you want to look at two things. All of the assets that you have that can do better over time, some of them will pull back and have lows. Hopefully, you're not selling in those lows. Some of them will be like, a Porsche 911 or certain other cars that will meet that, and they hold their value. So during times, even though the market volatility may be going down, you have an asset that's actually holding value. It's a good cash parking position. And that is one of the reasons that I look at diversifying my portfolios into automobiles, because I believe that they are almost, in reality, they're almost recession proof. And to a certain extent, they're inflation proof, because what we do find is with the Porsche line, especially in the Carrera, this car has bumped up so much on a Carrera base to cause these other cars in, slightly used. I'll put it, there's basically two categories you guys want to research here. And that is the 991.2, which is the category I own of the 911. And then you can jump into the 992. That's the new generation that's currently being manufactured. They're a little softer. The 992s for the 911s are a little softer in the early years, meaning 2020 and 21. If you get into a 991.2, which is going to be 17, 18, maybe 16, those cars are starting to edge up. And that is something that a lot of people are missing around what kind of vehicle to get, because everybody is, like I said, everybody is in a position where they are going to have a car. The question is you might buy a BMW 7 Series, or you might buy a Mercedes, or let's say you want to do an M3 or an M4. You can kind of see right here, this is the current market of the 991, which is 2012 to 2019. You can see on classics, you got cars up here that are just, on the unattainable level. But for the most part, these cars are holding their values very consistently, some of which have been accelerating in value over time. And I think that is the point, is when you get into the 991s, these are an absolute steal if you can buy one low mileage, especially in a manual. That's the holy grail for Porsche. In case you guys are not car buffs, you'll learn that here on this channel. Is this is one of the big things that I talk about all the time, is the opportunity. And also, when you look at the Porsche market in general, right now, this is a big deal, because here's a good example of the lineup right here. You've got the 992.2. That is the current model that is being manufactured. The 991.2, that's the one we just showed on screen. That one is the endurance race, so it's a little bit different. The 997, which I think is going to be a banger in terms of value, it's an older vehicle, but it definitely is a great daily driver. If you can get a manual, it's one of the most fantastic cars you'll ever drive. The 718 GT4, and then, of course, the Macan EV, which they don't make the Macan anymore, but they are making the Macan EV. Personally, I think the Macan EV is a dump. That one is not one that I think will perform. I would stay in the 997, maybe the 718, or the 991.2. These three in the center are the cars that we will continue to see. And the market, to the point in this article, is it is a lot more selective. 100%, meaning they're looking for a certain kind of car. For instance, the 991.2 in the Carrera GTS, that's a good example of one that most likely will really start to accelerate in value around and in that class. These are called modern classics. And when you're looking at modern classics, you're mostly in the Porsche, a handful of BMWs. Now, I'm not saying all BMWs, I'm talking about new. If you go out and buy a new 5 Series, this car is going to depreciate anywhere between 35 and almost 40% in the first 3 years. That is the kind of hit that you don't want to take, because you pull that trigger on a Porsche Panamera, which is a 4-door, probably equated to a BMW 5 Series. If you don't like that, then you could compare that over to the 911, which of course is the coupe. And this thing has 4 seats. So, if you do have an emergency and you have somebody you need to haul, you can. It's not a 2-seater out there like the Corvettes or, the Lamborghinis and the Ferraris. So very interesting opportunity. If you are looking at diversifying assets, that's the one thing that I try to get everybody to understand, is this is an opportunity when you have asset diversification. You've got to be able to look. You may go into precious metals, you may go into other crypto projects, which I disagree with. I think you have to have a certain allocation for crypto, a certain allocation for assets that are hard assets but somewhat liquid. That would be automotive. And then you can get into precious metals, you can get into businesses, which we'll talk about a lot here on forming the right LLC, setting up the right kind of businesses, doing business acquisitions, all sorts of things that can help you build wealth on the channel, on your overall in your life. And I want to get into real quickly, because I know you guys came for some crypto picks. So for you auto people out there that are starting to learn a little bit more about crypto, the ones that I hold and why I hold it, I'm going to give you the key ones that I think have an opportunity. The blue chip of the group, there's two, and that of course is Ethereum. I would say it's one of the blue chips of the group. Ripple and XRP is the other one. I'll explain both of them. But basically, think of Ethereum as the settlement layer for the internet. Now, imagine in the future when we start to see blockchain being utilized, this is going to be the token that most likely will get most of the traffic. So it's going to be used in DeFi, which is decentralized finance. If you guys don't know about that, stick around on this channel, subscribe right now. You're going to learn about DeFi, because I think automotive is going to be coming to DeFi as well. And that is where you can actually get a real world asset in the digital realm to where you can create liquidity for Porsche 911s and others. There's going to be companies out there doing it. We'll have some of them on the show talking about this. Also, the fact that it is the backbone of some of the fastest growing and largest stablecoins. Stablecoins will be a staple in every bank and every institution. It's coming. You have staking and yield as a form of a dividend. So basically, if you stake or pledge your asset, you get a yield against it. So just like an interest-bearing account or a money market fund, very easy to do. And also the risk. It's competition from faster chains. It also has a little bit of a regulatory overhang. And, the faster chains, things like Solana, and there's others out there that would be faster than Ethereum. Ripple is one of my core plays, and there's a reason why XRP continues to be in my wheelhouse, and that is the payments and the settlement play. This is going to be one of the bigger ones. So they kind of own the cross-border payments and use case area. They also have an institutional banking narrative, so they're going to be plugging into a lot of central banks and major nation states, we'll call it. They also have post-SEC regulatory, meaning they had to go fight the SEC for regulation clarity. They won. And then the risk you have is it's very reliant on institutional adoption. So that is the one thing I'm concerned around, because there are some regulation points that are happening right now in crypto that could put a little pressure on XRP, but we'll see. XLM, this is another one. This is called Stellar, if you want to research it a little bit. This is basically XRP's sibling, but it's got a little bit of a different mission. It's focused on remittances and financial inclusion. So it's kind of the working man's token, so to speak. Plus, they're doing all kinds of deals. Stellar just did a big deal with DTCC, which is a huge investment architecture inside Wall Street. It also moves kind of with XRP in terms of the charts. So be on the lookout for that. My one pick that is outside of these two ecosystems is in the Solana ecosystem, and that is one called Jupiter. You guys can download the Jupiter app. Go do that. I think you might be surprised at what you can do within it. It has and is the leading DEX aggregator for Solana. So if you want to buy tokenized stocks, other tokens, meme coins, this one is the place to do it. It's revenue generating protocol, so that's a big deal. It's kind of the picks and shovels bet on Solana if you don't want to, if you want to kind of diversify, which I always recommend. The fact that it does have a risk level, I would say it's because it's new. It's somewhat volatile of the four, but it is a riskier play that I do. Again, this is not financial advice, but I'm giving you an idea of how I set up a wealth-driven portfolio. And part of it is crypto, some of it is businesses, and some of it is automobiles. So we're going to be getting into all of that. Let's go back to cars for a second, because the depreciation trap is the problem that everybody faces on cars. And let's say, for instance, you want to go out and buy a BMW 7 Series. Basically, it loses roughly 60 to 70% of value in 5 years. That depends on which, data point you're looking at. But basically, that means you lose 65 grand over 5 years. So that's not an investment, guys. It's not even a cost of ownership play. So that one is a problem. And that is a $100,000 flagship, and it becomes basically a $30,000 used car. So if you're okay with having an automobile as an expense item on your balance sheet, okay. you don't have to listen to this podcast. You don't have to watch this show. That's fine. But if you want to reduce that and start to move in differently, that's a different game. Mercedes, same kind of situation. S-Class, let's go there. Drops 50 to 60% in 5 years. So again, you're talking about another sedan that sheds like 20K in the first year. You've got the E-Class versus the BMW 5 Series. Both of those lose around 2/3 of their value in the first 5 years. Tesla Model S, another one. This, of course, loses about 65% over 5 years. These are horrendous cars to own. You will not see one of those on my channel. And there is a reason that I just explained. The depreciation horde that comes in on top of those kinds of cars is absolutely terrible. The only way to circumvent that, if you are truly just in it for an expense item and you can write it off for one of your businesses, is get into leasing. That's the only way, because lease culture, you could do a wave of identical 3-year off-lease cars that are flooding the markets. That's what's causing these things. That's why you're seeing this kind of thing. That's what I'm saying is leasing is a different strategy. Overall, we'll talk about that in a future video. But the punchline here is that the 911 is completely on the opposite extreme of all these depreciation sets. So you're talking about a vehicle that in 5 years depreciates as low as 13%. Can you imagine owning a car and only losing 13% over 5 years? That's on the basic 911. That's not even if you get into something special or you get into something that's very selective and you start to understand, which we'll share more of which vehicles that is and how those compare to crypto here in the future. So my case for the Porsche 911 as an asset is very, very specific. 160 years of production. I mean, this thing has an enthusiast market that's unmatched. Global demand, verifiable transaction data. I mean, we've seen this in auctions and marketplaces constantly. And then Porsche somewhat restricts the supply on these. So that in itself has created more high-end used car and aftermarket sales. So volatility comparisons, when you look at crypto that can draw down 60 to 80% in bear markets, so like what we have seen here recently, if you've got a 911, historically, you're going to be in single to low digit, if not up, on that same asset where you parked cash, and you've solved the other problem. You have a car that you needed to drive. So, and you, of course, we won't even get into the reason you drive these cars, which is getting into the right network of people. That is a much bigger topic that we will talk about here on the show. The point I want to get at is I want to get your mind into diversification. Any kind of wealth building is going to be done around strategic diversification. It is by far the only way to go. So when you look at the issues that we are facing right now in terms of inflation and the absolute explosion of where we are right now in overall dollar valuation. If you just think the value of the dollar and you follow the Dixie in comparison to what's happening globally, the amount of inflation that we continue to see is going to eat away, especially even if you're just holding cash. You've got a significant amount of inflation headwinds that are eating away at that dollar. In some cases, what supersedes even money market funds that you might be getting 4 and 5% on. So that's the problem, is you need an asset diversified table that can at least maintain the value or appreciate in value. So the right investments, stocks, obviously crypto, and then of course the right automobile and the right businesses. Businesses are a little bit longer run rate, but it is one that is a big one, and we'll be talking about that here on the channel here in the future. You guys, of course, I want you to do one thing: subscribe if you like this. We're going to be actually doing a little bit more deeper dives on some of the cars that I own and that I am looking to buy. And then we'll also talk about the cars that you should not put in your fleet and why. So we'll catch you soon right here on Velocity Assets.